Well, good afternoon, everybody. My name is Chris Dearborn from Nasdaq's Market Intelligence Desk, and welcome to another edition of Trade Talks. I'm filling in this afternoon and reversing my role a little bit for our esteemed colleague Jill Malandrino, who is out graduating today with her MBA. So congratulations to Jill. For all of us following on Twitter, please give a great shout out to her. It's a tremendous accomplishment. Jill, congratulations from everybody here at Nasdaq. Joining me today is Brian Joyce, my colleague on the Market Intelligence, who is also our resident CMT, or Chief Market Technician. We've got a couple of great charts to talk to you about today, as well as some conversation about the market move, which is really reversed here in the last couple of minutes. Again, there's been a very broad-based theme this week, and instead of being really kind of sectorized, economic data, IPO-driven, or even earnings-driven, it's been one theme across the board this week, and it's been macro. Macro between Trump and China, and that has been driving the market volatility as well as driving the volumes that we've been seeing in trading this week. So we'll kick things off with Brian and hear what he has to say on this. Brian, welcome.
Well, thanks for having me, Chris. So yes, we're here to look at some charts, the S&P and secondarily of oil. But as we can see here on the S&P 500, it had a big down move yesterday. And then today we had a similar type of price action where we traded all the way down. In both cases, both days, we bounced off support. Right around 28.36 was that horizontal blue dotted line. And what that represents is a gap from the March price action trading to the upside. So as we know from technicals, the gaps will often act as future levels of support and or resistance, depending on which way we're talking about here. So, but overall, I think the point is, given all the concern regarding everything on the trade front, the mixed messages we're hearing, we're essentially at yesterday and today's lows, we're down about 4.5% at the most from the 52-week highs made just a week or two ago. So all in all, I think we're doing relatively well given the 26% move off the December lows over 600 points. The pullback is, on a relative basis, has been very modest. And I think, going forward, I'm pretty optimistic about that. Obviously, anything can happen regarding the trade front, but the price action is certainly very constructive.
Absolutely. So we talk about trading volumes as a key indicator. Remember, volume validates the move, as the trading adage goes. And the trading volumes for the last year have been averaging about 7.2 billion shares a day on the consolidated tape. And what that means is that you have a decent amount of volume recently, but not great. For last month of April, we barely averaged 6.9 billion shares, and April was a significant move to the upside for the broader market, as well as all the sectors across the board. So you had a really big move. Get into May, and the adage, sell in May, go away, which people would have thought out of the first week was kind of a farce, even though you only had a shortened week because April began the first day. We made new all-time highs. Volume wasn't there to validate that. This week, we've only had 2 days so far where we've topped that 7.2 move day. And if you look at the chart where Brian was pointing out, one of which was yesterday, it was 7.8 billion shares on tape, telling you that the market sold off significantly based off of macro fears, but it wasn't a panic sell, and people bought that bottom. Today, we're on pace to do close to about 7.5, 7.6 billion. And if that holds through, it'll be the third day this week, which is telling you that you have some churn here, especially with the breadth kind of continuing to be kind of spread. And what that means is that people aren't selling the stocks who are long-term holders. We're seeing a lot of day trading back and forth.
Yeah, absolutely. When you're having a pullback, if you're a bull, you want to see those corrections take place on lighter volume. In general, especially when you look at an individual stock, the correction in price, but on lower volume tells you that the big portfolio managers, the big institutions that were driving the price higher are likely holding their gains, holding their positions during the pullbacks, and maybe they're paring back a little bit to lock in some gains from the upside move. But for the most part, they're holding those positions, and if anything, are looking to add to those positions on levels like the 50-day moving average or the 200-day moving average. And this is what we've seen here with the S&P 500 today and yesterday. You have bullish hammer stick candles right across the 50-day moving average. And even if we were to break down below this 2836 level, we still have a very good support in between the 2800 to 2817 level, which we highlighted yesterday and here again today, was the highs, or AKA resistance, back in October, November, December, February, and March. So clearly the market is telling us that this is a significant level. We eventually did break through that in early April, and now we have the pullback, the retest, which is just very common technical price action. The reason for it is trade fears. Trade fears have been on the radar for quite some time now. Obviously, it's taken a new level here with the increase in the tariffs as of today, but the markets for the most part seem to be digesting this pretty well.
All right, so talk to us about, let's move on to the next chart here that we have behind us and tell us a little bit about what we're looking at here.
So here we're looking at the price of WTI crude oil. As you can see, off the December lows to the highs from late April, we had a phenomenal rally, a 56% rally off those December lows. At the April high 2 or 3 weeks ago, we were up 47% year to date. We've now had nearly a 10% pullback in price. So there's your correction. But again, relative to the big upswing over the last 3 or 4 months, the pullback of 10% is not that much. As you can see, we're bottomed here on Monday, and the last 3 or 4 days since, we've been finding support along the 50-day moving average, which 2 days ago crossed above the 200-day, which is, as technicians know, referred to as the golden cross. So we have support from the converging moving averages. They made the golden cross, and at the moment, this also coincides with the 23.6% Fibonacci retracement of the entire move to the upside off to those December lows. So that's our cluster of technical support. Again, it's only the daily time frame. If we move to the next chart, which shows the same price action from a weekly time frame, we could see that the pullback, there's your 40-week moving average, the yellow line, which is synonymous with the 200-day. That's essentially equal to this week's low. And the pattern from this week's candlestick is what we refer to as a spinning top pattern. It often can denote a change in trend, in this case to the downside. So we need confirmation next week. So next week will be important for crude oil. If we can get some green price action for the week, I suspect we could have the lows in for this 2 or 3 week decline and the strong uptrend that we've been seeing through the first 4 months of 2019 could potentially resume.
So essentially what you're saying is in a couple of weeks you have higher gas prices coming into Memorial Day.
Correct. Very possible. What we have been seeing, though, is that the correlation of when oil has been doing well, the S&P and the broader stock market has also been doing well at the same time. So, these days we do produce a lot of oil here in the United States, so it's not necessarily the bearish indicator or the tax to the consumer. That's not the whole story as it used to be.
Yep, excellent. All right, ladies and gentlemen, it's about all the time we have here. Again, some interesting charts looking at the market. Markets have almost rallied to near positive right now from being down over 1.6% this week. Again, a very interesting, potentially bullish sign for the markets moving forward. My name is Chris Dearborn from Nasdaq Market Intelligence, joined by Brian Joyce. Thank you for joining us on Trade Talks, and if you're interested, you can follow on Twitter at Nasdaq Dearborn. Have a great day.